My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and
don't go in the valley.
yeah, no problem. We just wanted to get through.
It was a beautiful choice.
Glad we got out of the smoke. Whoa, okay.
But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky,
Look at it.
strip malls of the Central Valley.
We have made it sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines.
And have you just sold them in the Central Valley, or like throughout the U.S., or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019.
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay,
So.
and how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're gonna do more machines. One of them is actually a vineyard sprayer. So
Okay.
vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
I like you. Who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello,
Hey Danielle, it's Aki.
come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LEQ.
Can I take her out for a spin?
Please.
LEQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LEQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LEQ,
Yes,
schedule a doctor's appointment.
no problem. I'm working on it. Let's
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can't say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
Well, I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, But I know that it's only part of the way. No source of artificial intelligence, robots, will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right? As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or If you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year, because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You got to make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. It is Monday, June 5th, 2023. Is that right, June 5th? Yeah, I guess I got it right. Can you check? I know.
Yeah, no, it is. My watch at least says, my old school watch, my analog watch says it's June 5th.
All right. Well, it's June 5th, everybody. Carol Masser, along with, as you just heard, Matt Miller. Tim, you know, is on leave. It feels like no real conviction in stocks today. We're going to get into the trade. Apple hit a record, or at least got to a level that if it closed there would be a new record, an all-time high on a big product announcement. But I guess investors kind of shrugging it off.
Well, I mean, they bought it into that, right? It hit a high because investors were buying the rumor. And now, as they tend to do, they're selling the news. Makes sense to me, and it's driven us to the highest level that we've been since last August on the broader market.
All right, so we're going to talk about that. We're going to also talk about, we're going to actually head to the Apple Worldwide Developers Conference. Our Ed Ludlow has been there, and this is a story that you and I are obsessed with. It's among our most read, about a $1.5 trillion program for home buyers. Yes, you, me, Matt, all of us, it's supposed to be for, but it looks like it's been propping up a bunch of banks. Banks that will sound very familiar to you in just a moment.
It sounds to me like a giant scam, and I cannot believe
it's a government program
that these bankers and executives have gotten away with it for so long. On the other hand, there are defenders. For example, Mark Zandi is quoted as a defender from Moody, and he's a very smart man. I've been talking to him, interviewing him for 2 decades, you know. So I'm interested to hear that defense of it.
All right, so we're going to talk about that. We're also going to get into the latest on semiconductors. I feel like, Matt, every day there's some headlines. We've got the author back with us of Chip War, the fight for the world's most critical technology. And then, you know, that Saudi Arabia kind of going solo on a production cut, but the market's not necessarily buying that it's going to follow through.
Not moved at all. I thought it was interesting. The oil minister said he wanted to keep the market in suspense because he's angry that there's so many short sellers out there.
Gotta love it. All right, right now, though, folks, over to our TV colleagues. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic joined right now by Scarlett Fu, as well as our colleagues Carol Massar and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and our partnership with YouTube. Carol Massar, this started out like a pretty strong day. We should point out the broader market's giving back most of their gains. The AI trade has kind of faded a little bit, and even that rally we saw in oil has pretty much been unwound. And then I was taking a look at bank stocks. I don't know what's going on, but they're pretty much down across the board.
Is that just a setup for me? My goodness.
Monday,
thank you
Carol
for that.
Massar.
I know, I really appreciate it.
Happy birthday.
Thank you very much. Let's take a look at the bank sector because we are seeing some interesting moves, certainly. We've seen some pressure on the sector today. Large U.S. banks may have to boost their capital by an average of 20%. This was a story initially reported by Wall Street Journal. Our team certainly has moved it forward. And so this is really as a result of the bank collapses that we've seen in the bank pressure and financial system pressure that we've seen. So if you look at the KRE, the regional banking index, Matt, it's down about 2.3%. Pac West is down 3%. KBW broadening out, including some of the big banks, down about 0.8%. JP Morgan alone down about 1%. So concerns that they're going to have to boost their capital ratios there.
Yeah, at dozens of U.S. banks, apparently regional banks may have to meet these standards. So it's not just the large U.S. banks, but raising your capital by 20%, your capital buffers, is just a massive expense. And if you couple that with the story that we have out today on FHLB, which I think basically kind of takes the cover off what seems like a gigantic scam, that has to scare investors a little bit.
All right, let's take a quick look at the broader markets here. I did say that we did start off pretty strong here on this day. Now, pretty much all the major indices either in the red or at least flatline on the day. The NASDAQ, the one bright spot, and that's only up the composite by about 0.1%. The NASDAQ 100, we should point out, up about 0.2%. Meanwhile, your biggest laggard on the day, that belongs to the Russell 2000, Scarlett, down 1.2%.
Yeah, there's a great note from Michael Casper of Bloomberg Intelligence that about 38% of the Russell 2000 is unprofitable as of first quarter earnings. So on Friday, we had that bizarro market set up where the Dow and the Russell 2000 were outperforming, the NASDAQ was lagging. Now we're back to the norm, it feels like. So when you look at the sector performances, no surprise that communications services is leading the way up. And here we're talking about the Alphabets, the Netflixes, and the AT&Ts leading the way there. Materials also doing pretty well thanks to those fertilizer companies, and healthcare outperforming, but only up by 0.25%. The laggards include industrials and financials, going back to what you guys were just talking about with the banks leading the way down, and real estate investment trusts.
Let's take a look at some of the individual movers here. Target is on the back foot once again here on this day. Target shares down about 2.2%. Alcoa also down about 3% here, as there is a big focus right now on, I guess, some of the more cyclical type of names here. Remember, that got a pretty big bid last week, particularly at the end of the week, but that's not necessarily holding here on the day. Similar story for what we saw in the oil space, a big spike up in the oil stocks. That was, of course, on the back of what we saw with regards to the Saudi Arabian announcement here, but that is now unfolded. And let's check in real quickly here on Apple. The shares down about 0.3%. They have been higher by more than 2%, trading at a record high. We continue to monitor the news coming out of Cupertino, California. The announcement here of that mixed reality headset that they're calling the Vision Pro. It's a headset, and the headline crossing the terminal right now, it will come in early 2024, and it will come at a price tag of about $3,499. Be interesting test of demand here. I do want to talk about that a little bit, guys, but before we get to that, just real quickly here, let's just flip up the board here, and I want to go to some of the macro issues that I think partly took the market down a little bit of a leg, and that was that ISM services number that came out around 10 a.m. on New York time. Of course, this is basically survey data, so take it with a grain of salt, but concerns here about a potential contraction in the services sector. That number came in at 50.3. Remember, 50 is the dividing line between expansion and contraction, Carol.
All right, well, and what's interesting is as we watch some of the economic data points out, nonetheless, we have seen a move up in the S&P 500, right, off that October 2022 low, right? We actually went up 20% earlier in today's session. So you do wonder, what is this? Is this a bull in a bear's clothing? And that is a question that was posed to Anastasia Amoroso. She's iCapital Chief Investment Strategist, who pointed basically to earnings revisions to explain her thinking. Here's what she had to say earlier.
First of all, you look at the earnings revisions ratio, for example. I think the point you made earlier before that the massive earnings correction happened in 2022, but we started to see now the number of upwards earnings revisions are actually starting to outnumber the number of cuts. And so that tells you that as the economy is surprising to the upside, so is the earnings growth as well. So that historically is the reason why equities rally.
All right, that's Anastasia Amoroso of iCapital. But what's interesting is I always feel, Scarlett, very managed when it comes to earnings expectations. I do feel like it's a bit of a game. But nonetheless, are we over pessimistic potentially about where earnings go from here? Matt and I have been talking about earnings revisions. We certainly did it last week. And so we're starting to see them move up. I'm not quite sure what it tells ultimately.
Yeah, I mean, it depends on how low management wants to set the bar, and we're going to have easier comps going forward in the second half of the year, but of course that's when we're expected to see more of a slowdown. I want to go back to what Romaine was just talking about, this new Apple Vision Pro set at $3,500.
Did you just put in your order? Is that?
No, but if you contrast that with the Oculus, which was, what, $300 according to Google right now, who's going to spend money on this?
Yeah.
Oculus hasn't done well.
Yeah, well, the Oculus was more expensive at the outset. I don't think it was $3,500.
And clunky.
And clunky, that's right.
This won't be?
This is interesting, but it raises a question, and I think it's a good point as to what the use case is. I mean, if there is something practical you could do with this, then yeah, $3,500 maybe is justified. But if this is just a toy, then you're going to have a very limited audience.
Fancy ski goggles.
I mean, well, first of all, they look like exactly like ski goggles. So anyone who's just listening should know they are basically ski goggles. But we talked to a guy who runs a company called X-Ray Glass earlier, and what they do is when you're talking to somebody and looking at that person, you get the subtitles of what they're saying in your glasses, in your field of vision. So it's great for somebody.
So if you're standing face to face with somebody talking, and you have the glasses on instead of just looking them in the eye.
Yeah, if you're hard of hearing, for example, it's going to be very helpful. If you're at a concert, if you're at a bar, I know if you sometimes go to the club, you can't really hear. So it's I think that's, for example, an incredible use case.
I guess, just thinking about how we might use it, but the cost part of it, I guess I never thought I would spend more than $1,000 for a phone, and yet here I am doing it. So I do wonder, that there might be a niche market, and Mark Gurman has talked to us about it, that maybe it's a $6, $7, $8 billion market for Apple in terms of annual revenues, and it just continues to bring people into the Apple ecosystem, and that's kind of permanently or
you guys are more optimistic about this. And I mean, you mentioned, I think Matt mentioned Oculus or somebody, Scarlett did. But I mean, we've kind of tried this before, and maybe this product is miles better than those, but I feel like we've been here before, and it just, I don't know. What was the Google one? That didn't work out?
Google Glass, right?
I see an Apple headset in your future, Romaine.
No.
Apple headset, the Apple Watch, $1,000
He's going to be walking around the newsroom like, get out of my way, I got my headset on. It's coming.
We will tweet that out when that happens.
I buy it.
Absolutely.
I'm on the buy side of this for sure.
All right, folks, that's a wrap. We're going to come back in less than an hour's time. Yeah, Matt will have it for sure. We'll be back in less than an hour's time. Continue our cross-platform coverage, counting you down to the close on this Monday. Join us, radio, TV, YouTube, and Bloomberg Originals, 4 p.m. Wall Street time for Beyond the Bell. Join us. All right, time to get to this story. Matt and I are obsessed with it because it's like, can this really exist? It's a 90-year-old federal, 90-year-old federal home loan bank system, which has ballooned to more than $1.5 trillion in terms of the money that it is working with. A year. It's a relic of the Great Depression. It had a very, very specific mission, and yet has really grown into a backstop for banks taking all kinds of risks and a diminishing role in funding new mortgages, Matt, which is what it was initially all about.
I mean, to me, if you're a banker, this is fantastic, right? Because if you get a banking license, then you can just use this as like the bank of dad, essentially, and take whatever risks you want. And if you come too close to failing, you can fall back on it.
It's just like the backstops you and I have, right? We just kind of like tap another. Yeah, no, we don't have that. Let's get to the story. Bloomberg News senior wealth reporter Heather Perlberg wrote it. She's on the phone in D.C. It is one of our most read stories on the Bloomberg today. Heather, tell us about the Federal Home Loan Bank System.
Yeah, so earlier this year, many of us watched the kind of chaos and collapse of Silicon Valley, Silvergate, Signature, and as information about their financial health started kind of trickling out in the autopsy, it became clear that they all had tens of billions of loans from these federal home loan banks. And so we were left kind of scratching our heads thinking, well, what are these things? I mean, has federal in the name and has home lending in the name? How come they're helping prop everyone up right before they fail? So what they are is a system of 11 banks that is sort of a Depression-era relic. And now it's turned into this arcane kind of web that is really helping finance banks, helping them with daily liquidity management, and doing lots of things that have nothing to do with housing.
So how do I get hold of one of these loans? I mean,
It sounds
unbelievable,
right? You just have to be a bank. It sounds
like these banks that were more focused on crypto, like Silvergate and Signature, they had billions of dollars from FHLB, and of the $1.5 trillion, it doesn't seem like very much at all goes to actual, helping low-income people finance home purchases.
Right. So with the crypto-related banks, there's kind of a weird system that they have. So when you join one of these banks, if you do a certain amount of home lending or even buy a certain amount of mortgage-backed securities, you can be a member. But they don't keep tabs on that over the years. So when Silvergate kind of got out of mortgage lending, they remained a member. And even though they were doing virtually no home lending, just borrowed and borrowed and borrowed. And there's no checks on what the money is used for. So, that leaves things very open for all of these banks. So no, they're not for home lending at all.
Right. So in other words, when these banks start to go into trouble, right, they can kind of tap into this. And at the same time, and I think something that certainly got into our craw is that this whole idea that executives were getting their bonuses, right, and being paid out while these banks were tapping into this program.
Yeah, we should point out the CEO of the San Francisco FHLB got $2.5 million in pay and bonuses last year when I guess she was giving all of this money to SVB, First Republic, Silvergate. Is that going to get clawed back?
No, it's not. And they are definitely incentivized to grow their membership and to give bigger loans. And all of that is tied directly to their bonuses.
But Heather, who is it? Congress that's incentivizing them? Who's behind this?
Well, I mean, it was created in the 1930s. It's sort of a publicly subsidized private institution. It's a financial cooperative. So all the banks who are members pay into it a little bit with stock, and then they raise money in the debt market with bonds. But
tax-free.
Sorry?
Tax-free bonds, right?
Yeah. There's a lot of tax benefits. There's a lot of government benefits for a system that really should probably be private.
I guess one of the things I want to ask, and it's not just your Silicon Valley banks, right, or Signature, that tapped into it, Signature specifically. Big banks tap into it as well, correct?
Yeah, JP Morgan, Wells, all of these banks that have kind of scaled back on home lending use it as a way to get cheap money and kind of arbitrage or do financial management depending on which deposits are coming out and when they need money. And these things have a lot of other sources of cheap funding. So it doesn't seem like it's something that would be mandatory or necessary for them.
Heather, what are the rules in terms of being able to tap into this? Because it sounds like within your reporting too that there were some questionable financial institutions that maybe shouldn't have been tapping into it, but were.
The rules they basically look at the collateral you pledge. So once you become a member, which again just requires a kind of minimum amount of home lending, you're in sort of for life, because there's so many giant insurance companies, which back in the day were hugely important to the mortgage market and now do virtually no home lending. So it's sort of like a private club, and once you're in, you're in. The rules are kind of nebulous, and you can pledge mortgage-backed securities, real estate assets, all kinds of things for collateral, and then they just give you money. Don't ask you what you do with it.
Which is a problem if that collateral turns out to not be so great, right?
Exactly. I mean, we had the second and third biggest bank failures in history.
Exactly.
And you talked, Heather, you got a quote from Elliot Sloan, who's a spokesperson for the San Francisco FHLB. Elliot says the level of advances to a member is based on a careful, thoughtful, and conservative underwriting approach, which doesn't seem to be borne out by the results. And by the way, do they care at all if it has anything to do with helping lower income people buy houses?
Not really, especially when it comes to emergency funding. Silicon Valley Bank was asked to pledge $45 or $46 billion in collateral for those $15 billion in loans. So anybody looking at that can see they knew the financial health of that institution wasn't so great. I mean, that's a lot of collateral for the loans you're getting.
What's crazy is, and you include in your story, that the lion's share of U.S. home loans are now issued by non-banks, such as a Rocket Mortgage, right? And they cannot tap the FHLB system. So that is just another mind-blowing thing. Part of me thinks they get away from it because, as you also point out, this assistance from the government doesn't appear as a line in the U.S. budget. So there's no real congressional, oversight?
Right. I mean, they exist in this kind of limbo. It's definitely a little bit of a congressional gray area, and I think that has benefited them greatly over the years. It's sort of like Fight Club, right? Like nobody wants to talk about it. Mm-hmm. Nobody wants anything to change because there's so many people, big banks, small banks, the executives, insurance companies. It's just benefiting too many people for them to just take it away.
But not the housing market.
A lot of housing.
Yeah,
well, the housing market, too. I mean, that's a huge problem. And a lot of housing advocates want to see that number, that 10% that they get, increase to at least 20, but that would still be really a sliver.
Do we have to blame George H.W.?
Maybe Herbert Hoover.
Okay.
You have to go back up.
You did talk to one independent director on the board of Boston's FHLB, Cornelius Hurley. It doesn't seem like he serves on the board anymore. He was there for 14 years, but he said it's embarrassing that this is a public entity and we should be demanding more from them. Do you expect that we're going to hear more about this, Heather, from board members or from Congress in the coming weeks and months?
I think so. There's Senator Cortez Masto is very passionate about this subject. She has a bill in there trying to bring the number dedicated to the affordable housing program much higher. There are other people looking at this, and the FHFA, who regulates all of these banks, is doing a 100-year review and giving their recommendations to Congress. So it certainly seems like all of the dirt that was kicked up earlier this year is going to come to a head at some point.
And you know what? A bank can actually tap, right, Heather? More than one FHLB.
Yeah. Exactly. And they like to say that that's not a problem the way it used to be, but you can look at the books and see that Wells Fargo and JP Morgan belong to more than one, even now. So they may not be playing them against each other to get better terms as much as they used to. Really do compete for business a little bit.
Well, and I guess many would say, the takeaway here, Matt, is, this is a program that's set up to help kind of Americans, right, in terms of buying homes.
It was,
and yet that's not what it
seems to be
doing.
A runaway. It seems to have gone rogue, essentially, this program.
Exactly.
And, the bankers are happy about that.
Heather Perlberg, great reporting, senior wealth reporter at Bloomberg News, on the phone from Washington, D.C. This story on the Bloomberg Terminal and at Bloomberg.com. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. Choppy session with the Dow down 156 right now. Decline there of 0.5%. We've got the S&P in the red now by 6, down by about 0.1%. Nasdaq lower by 5, a drop there of just about 0.1%. A couple of minutes ago, we had equities at session lows. Slight bounce higher right now. Subdued trading as Apple erases earlier gains in anticipation of that new mixed reality headset. We've got Apple shares down now by 0.8%. Moments ago, we got a price tag on that mixed reality headset, $3,499. It will come out early next year. 10-year yield 3.68%, with the 2-year right now 4.47%. As for the market backdrop, Lori Calvasinas, head of U.S. equity strategy at RBC Capital Markets.
I want to see what happens when the market reaches 4,300. I think that's going to be an important test for me. Just seeing whether or not we can surpass that barrier. I think a lot of the technical community is looking at that as an important test. So I want to see how we act once we, kind of get a little bit past that.
And right now we're at 42.76. Spot gold up 0.8%, 1963. Crude oil, major theme, major story today. WTI, West Texas Intermediate crude up 0.4%, 71.99 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Did you buy your headset, Charlie?
I wouldn't mind. I tried one. I don't think I'm going to go out and get one. Now, I'm not saying when I tried one, I didn't try one of Apple's brand new headsets.
Yeah.
I tried VR. I got a promotion through T-Mobile with my phone a while back. My son and I used it twice.
All right. So maybe not. All right. Charlie Pellet there, of course, with the Bloomberg Business News Flash. Hey, listen, Apple definitely all over the news today, certainly in focus. So we're going to talk about that a little bit later on. But Matt, it does seem like a day doesn't go by that somehow the semiconductor area isn't in the news as well. Today, we've got 2 key Republican lawmakers pressing the Biden administration to counter Beijing's ban of U.S. chipmaker Micron by sanctioning a Chinese semiconductor company and ensuring that Japanese and South Korean firms don't take advantage of the blockade. I mean, there is so much back and forth when it comes to, the chip wars, they're on.
Yes, they definitely are. And, it's going to be interesting as we pursue, I don't want to call it decoupling because the U.S. government has publicly said they don't think that's what it is, although China has said they do.
Yeah.
At least a de-risking or a diversification. It'll be interesting to see how this all shakes out because we depend for many of our high-tech products on so many chips that if they don't come from China, they do come from Taiwan.
Taiwan Semi, yeah.
How that gets sorted out is going to be interesting, especially as China ramps up, for example, car production. Eventually we'll probably all be buying Chinese cars here, so they will have chips in them.
All right, so let's see what Chris Miller has to say. He's Associate Professor of International History at Tufts University. He's author of Chip War, The Fight for the World's Most Critical Technology, which is winner, by the way, of the 2022 Book of the Year Award from the Financial Times. Chris is on Zoom from Boston. Chris, great to have you back with us. Hope you're well. So much is going on, whether it's NVIDIA's kind of massive AI run-up in terms of the share price, tensions between U.S. and China. You got chip stocks. They're really outperforming as a whole. How do you see this chip war playing out right now?
Well, it's clear that neither the U.S. nor Beijing is going to let semiconductors off their radar screen. If you look at what both governments are doing, they're pouring more money than ever before into the chip industries, and they're trying to find ways that they can gain a political advantage by shifting their chip regulations. And so the Chinese effort to restrict sales of Micron is just the latest example. But I think, as you alluded to, it's not going to be the last step. We should expect more tit-for-tat retaliation from the U.S. than China after that when it comes to semiconductors.
Chris, why are chips such a big problem area in terms of U.S.-China relations, more so than, say, steel or, plants, right? Is it just that they're so highly technologically developed and used in so many important products, or is the idea that you could actually put things on chips that would enable them to act like a Trojan horse and spy on your competitors?
I think there are 2 things that are making chips much more politicized than they used to be. First is that in many cases, you can't differentiate whether an advanced chip will be used in a civilian application or in a military application. And so the US is saying it wants to restrict China's access to advanced chips so that it can slow down China's military modernization. China's saying, wait a minute, the exact same chips are also used in civilian uses, and both sides are right. And so this is a problem that I think is not going to be resolved soon because there's technologically no way to differentiate which chip goes into which type of use case. I think the second issue is that the centerpiece of the world's chip manufacturing industry is Taiwan, which is, of course, a territory that the US sees as self-governing and the Chinese government sees as a runaway province. And insofar as China's military modernization has been aimed at Taiwan, the center of the world chip industry, it's just inescapable that semiconductors will become increasingly politicized as tensions rise.
What's the future, you think, of Taiwan Semi?
Well, I think it's a company with a really impressive market position. It serves almost all of the world's major tech companies. It has around 90% market share when it comes to the most advanced processor chips. And so on the one hand, it does have some more political pressure from the US government, from Japan, from its own government to make sure it's producing enough at home. But on the other hand, when you look at the economics, when you look at the market position, it's in a pretty enviable place. And I think right now what we're seeing is a tug of war between the business dynamics in which business is going great for TSMC and the political impulses of many other governments that want to see a change in its business model. And thus far, I think the business dynamics are largely winning out.
It's in a horrible place geographically, right? Politically. Wouldn't it be so much better if it was Switzerland Semiconductor Manufacturing Company? I mean, it's just the opposite of neutral, right?
Well, you know, it's in a horrible place when it comes to the geopolitics of the U.S.-China-Taiwan divide, but it's in a central place when it comes to the industries that it serves. If you look at smartphones or a server assembly, these are industries that have been built up in the countries surrounding Taiwan, in Southeast Asia, in China, in Vietnam, in the Philippines. And so the geography isn't a coincidence. It's in Taiwan because the entire electronics industry, the entire computing industry manufactures most of its products in that exact area.
NVIDIA. How do you think about that one? I mean, just, a meteoric rise, certainly in the share price this year, and it's really because of the AI craze. But they've also shown that demand has also ramped up. I mean, they've got some fundamentals behind it. So how do you see NVIDIA within the chip conversation?
Well, there's a shortage of NVIDIA's chips. Every tech company in the world is trying to get their hands on as many NVIDIA GPUs as they can. And that means that for the foreseeable future, the next couple of quarters at least, probably the next couple of years, NVIDIA will have a ton of pricing power as it produces the GPUs on which most AI systems are trained. Over the longer run, there's more uncertainty because the fact that NVIDIA has shown GPUs can be so powerful will attract other entrants into the market. AMD already produces GPUs. Intel is trying to find ways to eat into NVIDIA's market share. But for now, NVIDIA is the market leader by far. And so increasing demand for GPUs driven by the generative AI boom has been an explosive force behind NVIDIA's growth.
Do chips, Moore's Law was about chips, right? So they get twice as good
processing power, right?
Or half as cheap in every cycle. Are we also using twice as many of them in every cycle?
You know, it's not exactly the same exponential growth rate, but it's pretty close. Today, it's hard to find a manufactured good that doesn't have one or dozens or hundreds of chips inside. I mean, you mentioned electric vehicles at the outset. A typical EV will have several $1,000s worth of semiconductor content inside of it, including over 1,000 individual semiconductors. And so as chips get more powerful and cheaper, we're finding more use cases for them, which is turning almost every manufactured good into a semiconductor-enabled product.
So what is it, I guess, can we ultimately just have a world where everybody's kind of manufacturing a lot of semis because we're just going to need it that way?
Use our own?
I mean, yeah, I'm curious where this goes.
I think that the trend is clear. It's that we need more semiconductors year after year because we're finding new use cases for semiconductors. And as their capabilities grow and their costs decline, it becomes more attractive to plug more of them into many different types of devices. It used to be the case that you could have a kitchen in the United States without chips inside. But today, every device, your oven, your blender, your coffee maker, has semiconductors inside of it. And this is a trend that just seems absolutely inexorable. And it puts the companies that design and produce the most advanced chips in a really enviable market position because demand for their products keeps growing and growing.
But they have to make them at home, right? Do we have to make ours chips for our products here, and China has to make chips for their products there?
Well, I think both the U.S. and China are a long way away from making all the chips that they need at home. In fact, both countries will be very reliant on Taiwan, also Korea, Japan, other countries for the foreseeable future. There is a trend of trying to onshore some, but the reality is that Taiwan has far more advanced chip-making capabilities than China, and it has far more chip-making capacity than the United States. So for at least the next decade, both China and the U.S. will rely pretty heavily on Taiwan to manufacture the chips that they need.
So it sounds like for the foreseeable future, the U.S. and China are just going to have to learn to get along in order to make this all work. Chris Miller, thank you so much. We've been dying to get you on, and I know you're super busy, but glad we could find some time with you. Chris Miller, Associate Professor of International History at Tufts University, on Zoom from Boston. His book, Chip War, The Fight for the World's Most Critical Technology, joining us here on Bloomberg Radio. All right, off to World and National News. Nancy Lyons in our 901 newsroom in Washington, D.C. Hey, Nance.
Hey, Carol. Lawyers for former President Donald Trump are not saying what was discussed, but they did meet today with Justice Department officials concerning the investigation into classified White House documents found at Trump's Florida estate. They previously had sent a letter to the department saying they wanted to discuss how the investigation had been handled. The meeting lasted under 2 hours, and Trump posted on Truth Social a short time later, quote, "How can DOJ possibly charge me who did nothing wrong?" The grand jury that's been hearing the case is reportedly back this week after a break, which could mean a final decision on whether to pursue charges against Trump is imminent. There are also new signs the investigations against former President Trump are ramping up in Georgia. We get more on that from Bloomberg's Nathan Hager.
The district attorney in Fulton County, Georgia, is asking for research and data from 2 firms that the Trump campaign hired to look into potential fraud in the 2020 election. That's according to the Washington Post, which also says special counsel Jack Smith is questioning witnesses about the company's work. The Trump campaign paid Berkeley Research Group and Simpatico Software Systems more than $1 million to try to bolster his fraud claims. The Post says information from those firms could be used to build a broader racketeering case against the former president. In Washington, I'm Nathan Hager, Bloomberg Radio.
Former Vice President Mike Pence is ready to take on his old boss. He has filed the paperwork today to run for president in 2024. His formal announcement is expected Wednesday in Des Moines, Iowa, which is his 64th birthday. Ukrainian forces are making a major effort to punch through Russian defensive lines in southeast Ukraine for a second day. Kyiv authorities say their forces are increasing offensive operations and making some gains. Russia, meanwhile, continues its airstrikes on Kyiv. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. Apple lower, the Dow, the S&P, NASDAQ in the red, but the NASDAQ 100 index is up by about 0.1%. Choppy session, lots going on. Let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks well off their session highs as Apple does fade during its developer conference. Dow's currently down 150 points. S&Ps are now down 5, while the NASDAQ declines by 6. The U.S. 10-year yield at 3.69%. Gold is up 15. Oil trading in the green, and Bitcoin is sinking by 6.3%. Among the main 11 S&P sectors, leaders were telecom and healthcare. Industrials and financials were under pressure. And leaders to the upside in the Dow, Amgen and Walmart, while Intel and 3M both fell 4% and led to the downside. In other news, Apple at its conference prices a headset at $34.99. And Twitter is working on a live video product. In the crypto space, the SEC sues Binance and the CEO for breaking U.S. securities rules. And wrapping things up, GitLab reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your terminal, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got, just about 18 minutes, 17 and a half, let's be exact, left in today's trading session. You know, Matt, it's kind of a lackluster day-ish. I feel like there's no real conviction.
Yeah, well, we were up and now we're down. So I think it's pretty interesting. But as I said at the beginning of the show, buy the rumor, sell the news is one of the first things they teach you on Wall Street. And we definitely have bid this market up and bid Apple up into the start of the Worldwide Developers Conference. So now
Is it all Apple, though, you think, today?
No, but I think in general, you can, it's NVIDIA, it's Apple, it's, the information technology sector and a handful of gigantic companies, those two obviously are some of the biggest in the market, have been bid up, and now they're falling as we see this headset released for $3,500.
Yeah, it's interesting. Communication services, though, still among some of the standouts in terms of the major industry groups. So let's get to it.
What is communication services?
I don't know. It's such a, come on, folks. Put together, get a consultant, put together a focus group, and let's rename it, because it's not, right?
Well, it's just... Is it Apple? It's not Apple, right?
No, it's not. It's like Comcast. It's Netflix.
It's not NVIDIA.
But Netflix is in there.
Yes.
News Corp is in there.
News Corp.
I know I always do that. Warner Brothers. Sorry.
I'm going to get in trouble now.
No. News Corp. I don't know why I always do that. Hey, let's get to it, though, and talk a little bit more about the broader market environment, because we have a great guest here with us. Lisa Erickson is Senior VP and Head of Public Markets Group over at U.S. Bank Wealth Management. She's joining us on Zoom from Minneapolis. Lisa, nice to have you here on this Monday. It is kind of an interesting trading day. I don't know. Is there any really clear direction or theme, if you will, in terms of today's trade from your perspective?
I just really think that what's going on in the market today is a bit of listless trading. We've had obviously some big news on the debt ceiling. We're past earnings season. And this week is devoid of really big macro announcements. So the market really is more in a wait and see mode.
What are we waiting for?
Yeah.
Yes, great point. Well, we are really waiting. I think the next big shoe to drop is, of course, the Fed meeting next week. And then on top of that, we've got CPI and PPI before that. And so markets are going to be really attuned next week to two things. One is the direction of the inflation numbers, hopefully continuing to see that disinflation trend that we saw started in the second half of last year. And then, of course, they want to see how the Fed's going to react to the data. Right now, the market is betting on a pause and then possibly a hike further in the year. But they're going to want to see whether the Fed is responsive to some of the slightly hotter data that we've seen in the last few weeks.
Lisa, don't you think it's kind of a done deal that coming off of all of the Fed speakers that we're going to see nothing in June and they're going to wait until the next meeting in July? That what difference is kind of the data points that we're going to get now and before that June 14th meeting? Like, what's going to really change, to be quite honest? It's not like you're going to dramatically bring down inflation, or you're going to see some, differences in terms of the labor market. So why wouldn't it make sense for the Fed to continue to raise rates?
It does look like, to your point for the June meeting, that it's going to be more of a pause, and that's really based on the Fed speak from the more senior leadership saying it might be good to take a wait and see. I think possibly the only thing that could change that would be really extremely hot prints, from CPI and PPI, but even then it would be, a couple of data points. So it would depend on the composition of what it looks like. But to your point, I think really it is looking more like a pause.
Because if the Fed is data dependent, the data in a large way, right, still shows inflation high, a strong labor market, and those are really the two mandates by the Federal Reserve.
Absolutely. And really what we want to see is those trends to continue to taper down gradually as we've seen, or even to your point, if we got a stronger surprise on the inflation numbers on the downside, that could be very positive. So again, the only real potential disruption between now and next week's meeting is, again, some unexpectedly upside, which would be negative for the economy, price pressures from CPI and PPI.
So, but do we, if we're waiting and seeing, do we see before the next earnings season kicks off? Do we get the idea of what the Fed's going to do before we have to look at what is now forecast to be a 9% drop in earnings in Q2?
So the earnings revisions, to your point, really look more slow for the second quarter. However, for the second half of the year, we're seeing an expected rebound to end up around 220 on the S&P earnings for the year. And so that, if that happens, really, I think would reiterate for the market that companies really have been able to be more resilient than initially expected at the beginning of the year in terms of how they've been able to hold up their profits.
So what would you suggest to investors at this point?
We are overall moderately cautious, and the reason why is while companies, as we just discussed, have been relatively resilient in being able to hold up their profits and really on the back of a strong behavior from the consumer, we do see that there continue to be headwinds in terms of monetary policy, not only where they are in terms of the current interest rate and quantitative tightening programs, but also in terms of the lagged effect, as we've experienced this past year of rate increases. Some of those take time to filter through to the economy. And so between that and the price pressures that we're seeing, where inflation has come down, but it's still at elevated levels, again, it just makes us more hesitant on the ability of growth to bounce back from its currently slowing pace.
Yeah, I mean, right now we're looking at S&P 4277. Doesn't that seem aggressive to you? Like a little bit high? Do you think we're going to be looking at more like, 3,800 at year end?
The market really has been able to keep bouncing upward and climbing that wall of worry, to your point, and it has been a surprise. It really has been on the back of hopes that the Fed will pause and potentially even pivot, and also the fact that earnings have been better than expected, even though slower. They've been able to beat low bar expectations. Again, the question of where that's going to head going forward is open, and so that really is leading us to be more defensive.
But those things sound unlikely that the Fed's going to pivot this year, right? Or that earnings are going to be great. Isn't it more likely that the Fed raises again and earnings are going to suck?
The Fed certainly has evinced a strong commitment to continue to bring those inflationary pressures down to its 2% target. And given that we're more in the 4 or 5 plus level, certainly they are going to be biased towards tightening.
All right, we're going to run. Hey, Lisa, thanks. Lisa Erickson, head of public markets group over at U.S. Bank Wealth Management from Minneapolis. I'm thinking maybe that why the markets, they hit that S&P 20% correction to the upside and then decided to take a break.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple has priced its long-awaited mixed reality headset. It caps more than 7 years of development, and it vaults the company into a market that could someday transform computing. The price tag, $3,499. It will be available early next year. The device, by the way, is called the Apple Vision Pro. It was introduced today at Apple's Worldwide Developers Conference in Cupertino, and it served as the finale for a day of software and hardware announcements. Right now, we have got Apple shares trading lower by about 0.8%. The International Air Transport Association, the airline industry's main lobby group, is doubling its estimate for global net profit in 2023 as a surge in flying drives up ticket prices. Bloomberg Radio is at IATA's 79th annual general meeting in Istanbul, and we caught up with Qantas CEO Alan Joyce.
Qantas is going to make a record profit this year. We said in a market update a couple of weeks ago up to 2.475 billion, which is $1 billion more than we were making before COVID. Our balance sheet's the best it's ever been. We're set up now to take a new aircraft every 3 weeks to renew our fleet and to grow our fleet.
And And you can hear more of that conversation on the Bloomberg Surveillance Podcast. You can download it wherever you get your podcasts. Jamie Dimon not running for public office. That's according to a J.P. Morgan Chase spokesperson in response to a Bloomberg television interview last week. Those are our top stories. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Messer along with Matt Miller. Tim, you know, is on leave. Let me just correct myself. You're right. I said a correction. I meant the S&P rally off the October 12, 2022 low. It hit 20% today. So officially, non-officially, whatever, you know, some could say it's a new bull market. Technically. But as soon as it seemed to hit it, I guess my point was, it dipped down again, and I just wonder if there's some resistance, certainly technically.
Well, we have a record level of shorts on the SPOOs right now,
which would do it, right? Or
ever. So,
or you would think that they would be covering, right?
Yep.
So that it would kind of give it more momentum to the upside. But anyway, so we're going to keep an eye on that. In the meantime, we're going to head over to our TV colleagues soon and count you down to the close. What's interesting to you? Binance?
Oh, yeah. The SEC finally coming out and suing Binance. This is Listen, I don't think people realize how big Binance is. I mean, they have 120 million users that are trading crypto, and they trade trillions of dollars in crypto in each quarter. So it's just immense. And if the SEC sues, maybe they come out with an agreement the way Kraken did. You know, Kraken just had a $30 million agreement, which is fine if it happens like that with Binance. But if it breaks them, it would be huge.
Well, you wonder, right? What's the SEC? They're charging them with mishandling customer funds, misleading investors and regulators, breaking securities rules. 136-page complaint. That's a lot of stuff.
It is. And yeah, I mean, maybe there is a lot to talk about there. We've seen a lot of problems in various spaces of the crypto industry over the last year, so this could just be more.
And apparently, I guess Binance, right, has been negotiating with the SEC, so they're, I guess, a little ticked off.
And the CFTC as well.
And they're a little ticked off that they've actually come out, I guess, and put out this complaint, and right?
I don't know if the SEC is ticked off, but...
well, no, Binance, because they said that this is disappointing in terms of the complaint. They said they'd been talking with the SEC, some good faith negotiating, so I guess they thought things were moving along.
Yes,
so
that's exactly what they said when the CFTC came out, too. They were disappointed.
Wait, what happened?
We're disappointed.
Wait, we're working with you.
They know how the game goes.
We want to resolve this. Yeah. We want to pay millions of dollars in fines and say we did nothing wrong. No, I'm just kidding. This stuff gets tricky, but nonetheless, this is a story certainly catching our attention. All right, folks, time to head over to our TV colleagues. That's because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Matt Miller. Welcome to our audiences across Bloomberg Television, radio, originals, and those folks streaming on YouTube. Carol.
Yeah, I'm looking at a market that just feels like it just, is losing all of its steam here. We're just covering off our lows of the session, and we did technically, right, see that S&P 500 20% off its October 12, 2022 low, that rally, right? So hitting it, but it does feel like investors not willing to really kind of put more conviction behind the trade. Or at least any more.
Yeah, well, it looks like it was kind of a buy the rumor, sell the news thing, not just for Apple, but also for the broader big tech market, for NVIDIA as well. And overall, if you look at the S&P futures, I have a chart, I think it's 72, 75. You can see the biggest short position ever in S&P futures right now. Dan Curtis put that together for me with data that came out on Friday. So this is not it, and neither is...
Yeah,
but if you do have a chance to pull it up, 72, 75, I think is the number there, and you can see it.
Yeah. All right. Well, your point is made, Matt, and I think you would talk about how pessimistic this market has been overall, despite the fact that you do have people at least willing to come in here and try to bid things up. But it gets to the whole question, Scarlett, of sustainability.
Yeah, sustainability. I just look at the oil prices, right? They started off the day on a high note, and they've pretty much given back all their gains. Energy stocks lower by 0.6%.
Yeah, let's walk you through here what we saw in the markets today, because we did talk about this idea here of coming into the day with a relatively strong open here. The Dow Jones Industrial Average opened relatively flat, and that was your laggard for a good portion of the day. It's going to close down by about 200 points, or about 0.6%. The S&P opened flat, but it risen about about 0.4%. It's going to close lower by about 9 points, or 0.2% here on the day. We talk about what we saw with the NASDAQ Composite and the NASDAQ 100 here on the day. A big lift that they got earlier with Google at a 52-week high, Apple at one point actually trading at an all-time high. NASDAQ closing lower, basically by about 0.1% here on the day, and the Russell 2000 and those cyclical names, bank names as well, down on the day by about 1.3%.
Yeah, I'm just going to go to transports, if I may, down about 1.1% here. I always love watching in terms of indication of what's going on in the economy, but they've really been struggling for many months here, Scarlett. They can't seem to kind of get back to those February highs, Matt, that we saw.
Yeah, it does look like it'll be a little bit of a struggle. I don't know how many days it's going to take. If you look at the breakdown in terms of the groups, you can see that IT is one of the losers today on the S&P 500. But we did have communication services up, Carol, as you pointed out earlier. That includes, the streaming businesses, the Netflix of the world, for example. But the Apples of the world were down today. Industrials were the biggest losers, and financials, as Romaine pointed out, off as well. But communication services, the biggest winners, followed by some defensive sectors, utilities, consumer discretion, and healthcare.
Includes the News Corps of the world.
Yes, the News Corps.
All right, everybody, let's get to some of the individual gainers, if I may. Netflix on that list. We saw it earlier, really topping that S&P 500, the NASDAQ 100, up more than 3.3%, or up around 3.3% at its highs today, settling back, but still with about a gain of about 0.8% here. On Friday, you might have seen shareholders voting to reject pay packages for the company's leadership. So other than that, though, no real catalyst in terms of some of the upside momentum earlier in the day. Do want to mention Palo Alto, really a standout and really holding on to much of the gains, topping the S&P 500 and the NASDAQ 100. On Friday, you might recall after the market closed that news that it would have joined the S&P 500 index. It's essentially replacing Dish. So Palo Alto up about 4.4%. And one more that was also holding on to most of its gains today, Fortinet. It is topping the S&P 500 and NASDAQ 100, up about 4.6%, 52-week high. Again, no real catalyst, but nonetheless seeing some of these names outperform the general trade.
Lots of catalysts for the decliners I picked, at least to the downside. EPAM Systems is a IT services company, unexpectedly cut its second quarter and full year forecast only 1 month after giving the outlook and reducing its annual guidance. So not great there. 3M, investors are awaiting progress on the manufacturer's efforts to settle water pollution claims tied to its production of forever chemicals. So there's a lot of uncertainty there. Coinbase, of course, falling in line with the other crypto-linked companies after the SEC sued Binance and its CEO CZ. And this one is for Matt, because I know he follows the trucking company. C.H. Robinson down more than 6%. Analysts are not thrilled with unconfirmed reports that the trucking company is close to naming a Ford vice president as its next CEO. They say the company needs an executive with more depth, relevant experience to right-size operations, and Bozeman as their pick would be a negative surprise because he's perhaps not best suited for that kind of role.
Yeah, let's take a quick look at what we saw in the yield space, because we came in today and yields were elevated. Then around 9:45 a.m. New York time, we started to get some economic data, including revisions on S&P PMIs, and then about 15 minutes later, those ISM services numbers, and that really sort of took yields down a little bit of a notch here, down 2 basis points on the 2-year here, and similar moves on the rest of the curve. Now, these are relatively modest moves here, but the idea now that you have a Fed headed into a meeting next week where they're really going to have to balance out the prospects here of the resilient economy narrative with, well, a narrative, at least some data dependent, if you will, that seems to be suggesting softness in the economy.
Well, speaking of softness, when it comes to data points in the economy, durable goods orders today, ISM services, both of them coming in below forecasts and before the prior read. So you do wonder whether or not, certainly when it comes to services, right? We talk about how important this has been to the economy, you do wonder if maybe the Fed has a point in saying, okay, some of this data certainly, or some of the interest rate increases are certainly starting to, pick apart at some of the data points, Matt, and maybe slow things down so that maybe it makes sense to do a pause.
Do you think that's why Jay Powell just basically took the weekend off and just decided to go to a Dead & Company concert?
I'm glad he gets to reset the brain.
I didn't know he was human. I mean, I guess I feel encouraged to know that he's
Just
actually
the fact
like
that
a
he
real.
wasn't in a suit
He's a
was
real
surprising.
person.
Yeah, and he listens to the dead. Well, Dead & Company, which is obviously different.
What is the difference, Matt?
There's no Jerry.
Jerry's dead, for one thing. Billy's gone. Phil doesn't play in the band anymore.
It's a little different.
And John Mayer's there.
I want someone to ask Jay Powell about this next week.
Don't.
Or a week and a half, sorry.
I hope he doesn't get too bummed about it. Like I don't want him to be mad about it. I want him to be vocally supportive of Dead & Co. It's the last year on tour.
That's pretty cool. You gotta kind of give him props. Do you think he'll be asked about it the next press conference?
I hope not.
Really?
Yeah.
I bet someone will make a comment. They always
Let
the man live. I mean, he's got to have a real life, right?
Let the man live. Yeah. I like that.
Well, I mean, he's got a tough order next week because we'll probably get a pause, but he will have to come up with a narrative that, as Romaine, you pointed out earlier, threads the needle between all of the different concerns, leaves everything wide open.
Yeah.
Right?
But does this sort of make the case, though? I mean, because when I saw the ISM services, my first thought was maybe some of the commentary we got the previous week, this idea that they do need to step back, have that pause or skip, whatever we're calling it, to really assess the data, because it really is a mixed bag.
It's a mixed bag. I think it's really tricky. I guess I would also argue that we're still way up when it comes to that. We're far removed still from the 2% inflation rate. If that is truly their trajectory, then, I guess I would say that the Fed really needs to keep raising
They can't
rates.
move the goalposts to spend 2% forever for all central banks.
They could, but they're not. So if they're data dependent, if that's really kind of the framework that we've all been working with, right, Romaine, that shouldn't the data still
Well,
say
but I mean, the idea that they went from
raise
that
rates?
hard to two-ish, basically the average targeting. Remember, that was a big deal. I mean, as Matt said, they're not going to come out, realistically, they're not going to come out and move the goalposts. But I think you have a market now that is sort of speculating that, okay, if we get to say, right at 3 or maybe right below 3, is that enough? Is that enough two-ish, if you will?
That's a big question. What does two-ish actually look like, right? Is two-ish less than 2.5, or is two-ish anything between 2.5 and 3?
Do you think John Mayer knows?
John Mayer, he might have a good idea,
Think Powell just whispered that in his ear during the set?
O'Teal Burbridge might have an idea.
He wore an orange hat. You remember how Greenspan used to have the big briefcase?
Oh, right. Now we're reading the tea
there's
leaves.
An indicator.
Yeah.
Does an orange hat mean something? No.
I suggest you put that question in Twitter and you'll get a lot of answers.
Oh, danger, Carol.
I know. All right. Do we have to wrap? Oh, are we done?
Yeah, see you, Carol.
I think we're being told that we got to end this.
Okay. Time will tell. Let's just count down to that. Let's just get to that next Fed meeting. Let's just be done with it. All right, guys. That is a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. Check us back at 4 p.m. Wall Street time tomorrow.
Want people to skip the 3 p.m. hit and just wait until 4 to tune in?
I'm actually not back till Thursday, so.
Oh, no.
So you guys, it's for you to handle. Right now, though, we want to get to our team that's been handling all of the Apple news today. It's a big day for the company, the stock. So let's get to it. With us is Mark Gurman, Bloomberg News Chief Technology Correspondent, joining us, as well as the co-host of Bloomberg Technology, Ed Ludlow. Ed on the ground in Cupertino, California. I believe Mark is back at our San Francisco bureau. So, in LA, forgive me, right, Los Angeles. Ed, let me start with you. You're on the ground there. Talk to us a little bit about the mood as everything was playing out.
It's a complete zoo here. It's chaos. I just came from the Steve Jobs Theater where they opened up access to go and see the Vision Pro, the mixed reality headset, up close and personal. You can't actually put it on at this stage, but $3,500 for that first generation of mixed reality headset, shipping early 2024. I just want to say real quick, guys, if you allow me, Mark Gurman nailed every single point in that presentation, weeks and months in advance of them unveiling it. He was off by what, $400 on the price point.
He's amazing.
And I think the only thing we hadn't reported was the name of Vision OS, the operating system. But just a real hat tip to Mark, incredible reporting. And everything that he reported we would get, we got. and then a little bit more.
Hey, Mark, let me bring you into this then. First of all, kudos to you. And you're not at the Worldwide Developers Conference, probably not allowed in the building. But do you make anything of the fact that we're not allowed to try them on? Why wouldn't they want reporters to try them on? If this is going to be so great, why not let Ed Ludlow slip in his contacts and take it for a spin?
Definitely interesting choice to have these on display initially and not in an environment where anyone can just try them on and use them, right? That's the way it's set up. However, there is a external building away from the Steve Jobs Theater and away from where the device was introduced, where they're doing one-on-one enclosed demos where people can use them and try it on. So they're doing these carefully crafted demos in these very climate-cooled areas where the temperature is set just right, where the lighting is set just right to optimize the device, right? So they clearly don't believe in it enough like an iPhone where they can allow anyone to pick it up and use it and experience it. They want to be controlling the test experience, right? And I think over time, as we get closer to the launch in early 2024, that will loosen up and Ed will be able to get his hands on it, and as will I.
I am curious what you both think about this. And Mark, let me start with you. Is this going to be an industry-shifting product, which Apple has done in the past, certainly with the iPhone and the iPad and even the Apple Watch?
I certainly think this is the most impressive modern consumer electronics device that I've ever seen in recent history. The amount of technology that they've been able to cram into the Vision Pro is simply remarkable. Even at that $3,500 price point, I think they're still coming close to not making a real margin or profit on the device. I think that it blows every other product in this category completely out of the water, right? And I think this is the beginning of a long future for spatial computing and for mixed reality that no company is ever going to approach, at least in the near future, with any substance.
Ed, talk to us about what you supposedly can do with it, and what the hell is spatial computing? That's a term that I heard today for the first time, and now Gurman's using it like it's normal lingo.
One thing that jumps out immediately when you get close to it is the external battery pack, the external power source. So it has a cable running from it. Imagine, the easiest way of explaining it is imagine something the size of a pair of ski goggles. The ski goggles fit comfortably on your face, but there's a cable running out of it to an external battery source. And when you consider the use cases for augmented virtual reality, that is somewhat of a limitation, right? Spatial computing is that exact mixed reality experience, Matt. The ability to augment images onto the real world around you. 12 external facing cameras, 5 sensors, complete the sensor suite. The use cases that they gave are quite simple. One was in partnership with Disney, for example, showing Mickey Mouse or an animation of Mickey Mouse running around your living room. That is something quite tangible that our global audience can understand. For me as well, really simple use cases. Mark and I were talking about this last week. Well, imagine watching your favorite film in 3D sitting in a living room. It's a completely different experience to being at a 3D theater, for example. These are some of the things they demoed, along with just very basic things. Mark can touch on this, but one really big piece of big news that may go under the radar is that the long and deep library of iOS applications and iPad applications are already available or will be available on this. So it's kind of ready to go. And the big question is, what is the killer app? What is the killer use case that's going to get consumers to part with $3,500 of cash?
So, Mark, talk to us about the real use applications.
The real use applications I didn't see any that are particularly breakthrough as we expected, right? It's more so spatial computing, right? Optimized versions of the platforms and features that we use today. It's new ways of using your productivity apps. As Ed said, it's new ways of using your existing games, iPad, iPhone apps. It's a new experience for those, but they're not unlocking anything relatively new or groundbreaking in terms of capability. It's new ways of existing experiences, and there's nothing wrong with that. It's super cool and nifty, and you can see how this is going to replace a Mac and iPad over time. This is day one. It's going to take a while. At some point, they'll lose the battery pack. At some point, the battery life will increase. But certainly, this is an amazing beginning for what they're trying to pull off here.
So how does it replace a Mac? Are you saying that at some point you're going to be able to kind of like work on a document, it's in your visor basically, and you've got a keyboard, and that's how you do it?
Well, that's what it does already, this headset. Anything you can do on your Mac, you can do on the Reality or the Vision Pro.
You know, I have to say, first of all, I've been skiing for years with my goggles plugged into my iPhone anyway, or I was before they got rid of the headphone jack, because I have a contraption that allows me to listen to music while I ski. So that's not that big of a deal. I can see, though, an amazing use case in terms of, you know, when you're skiing, you could see how fast you're going, you could see where you are, you could have navigation in the goggles. The health use cases, I think, are pretty easy as well. You could see your pulse and, you know, other important metrics like that. And then you could use it, someone who's got hearing issues could see, you know, if I was talking to you, Ed, but I couldn't hear you very well, this machine with the use of software from, I think, X-Ray Glass is the name of the company, would be able to put subtitles of what you're saying right in front of me. So I feel like there are a lot of real-world use case scenarios that are pretty good.
That is a very good point. They actually gave the example of a Zoom call. So you think about it, the Vision Pro is sitting on your face. The lenses are pointed to your cameras. In other words, there is no camera pointing at the full structure of your face. So what Apple demonstrated was an avatar, a lifelike avatar that simulates an image of you for the purpose of Zoom calls. Can you imagine that? I don't know if you guys have seen what Meta have demoed in terms of their representations for the metaverse, but Mark Zuckerberg's avatar is a heavily animated version of him. What Apple demonstrated was a much more lifelike avatar, which, again, unsurprisingly, they put a heavy emphasis on the machine learning and AI capabilities they've been working on that power that.
Mark, how big of a revenue generator? I know we've talked with you about this before. Is it 6, 7, 8 billion? Just remind us. Potentially.
Well, if you think about the price, $3,500, and you use the idea that they're going to sell, let's say, 1 million of them in 2024, it's a $3.5 billion a year business, which is very small, even compared to AirPods, the Apple Watch, or the iPad, right? That's basically half of a one Mac quarter. Over time, lowering the price, new features, expanded production, you can get into probably something worth $25 billion a year, Apple estimates. But that's going to take half a decade. But this is a really terrific start. I mean, the technology that they've crammed into this, the processors they have in here, it's just all state of the art. It's the most advanced consumer electronics devices, they said, I've ever seen. I'm very impressed with what they've done here.
Pretty cool stuff.
I mean, I just can't wait until it gets better, frankly. Because obviously you won't have to have a battery pack attached to it for very many more years. And the AI capabilities could be a game changer in terms of what you can see on the street.
I think it's pretty cool. I think it's pretty interesting, and you know, leave it to Apple, right, to maybe create a category for something that we didn't think we needed, but could certainly be.
I've known I wanted this since I was a kid, reading Boys Life magazine, looking at the X-ray specs, and wishing that was real.
Our thanks to Ed Ludlow, who's been covering it throughout the day, co-host of Bloomberg Technology at Bloomberg News, on-site there in Cupertino, and of course, Mark Gurman covering it as well throughout the day, Bloomberg News Chief Technology Correspondent from Los Angeles. This is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A software company, GitLab, is soaring after hours. It boosted its revenue guidance for the full year. That guidance beat the average analyst estimate. And right now, after hours, we've got GitLab up by 18.4%. Down day for the Dow, the S&P, and NASDAQ, with the S&P falling 8 points today, now at 4273, down by 0.2%. Equities edge lower after both technology and energy stocks erased earlier gains and subdued trading volume. Tech shares led the S&P 500 lower, with Apple erasing gains of as much as 2% in anticipation of that new mixed reality headset, a headset that, by the way, will cost roughly $3,499 today. Apple shares ended the session down by about 0.8%. S&P lower by 8, down 0.2%. We had NASDAQ down 11, down 0.1%, and the Dow lower by 0.6%, down 200 points. 10-year yield 3.68%, with the 2-year 4.44%. Spot gold up 0.7%, $19.61 the ounce. And West Texas Intermediate crude, little change today, up less than 0.1%, $71.80 for a barrel of WTI. Cannot ignore the NASDAQ 100 index. Despite all the red today, that index advanced by just under 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charles has been covering the oil market.
I mean, I'm sure that probably is his name.
He's such
Although
a Charlie,
I'm not 100% sure. Yeah, he could be. His parents could have named him Charlie at birth.
But definitely not a Chuck, right? No.
Chuck Pellet?
Chuck Pellet. No, Charles Pellet works. Okay, anyway, oil. We've been watching oil prices today, shedding most of the gain driven by Saudi Arabia's output cuts as really a broader risk-off sentiment weighed on prices, and traders wait to see if ultimately these cuts will materialize. So let's kind of put it into perspective, as she has in the past for us. And we're talking about Dr. Ellen Wald, president of Transversal Consulting. She's also senior fellow at the Atlantic Council and a Bloomberg Opinion contributor. She's on the phone from Jacksonville, Florida. Ellen, nice to have you here with Matt and myself and back on Bloomberg. Do you think Saudi Arabia will follow through? And if not, what's their strategy here?
It wouldn't surprise me if Saudi Arabia follows through. They've already issued new official selling prices for their crude to all sorts of places, to Asia, to the U.S., and they've definitely upped the price to the point that it would definitely reflect that they're intending to make these cuts. Though it is possible if they get really strong demand, we could see them taking oil out of storage to meet that demand if they don't want to produce it domestically. So Saudi Arabia generally tends to follow through on their commitments. I think the bigger picture here is whether Russia is going to follow through on its commitment to cut 500,000 barrels a day, because they were supposed to do this, and we're still seeing exports that indicate that they have very high levels of production and that they're not cutting production unless they're sending less oil to their refineries domestically. I'm not sure we're seeing, any kind of gasoline or oil shortages in Russia proper. So that's really kind of the big question. And it's almost like this Saudi cut for July is kind of like a gift to Russia, saying, hey, we see you're not cutting. Here's a little gift to you, but maybe get your act together come August.
So I guess I have one question that has little to do with the Saudis, but how can the Russians produce and sell so much oil if there's such strict global sanctions on them? I mean, who's buying it?
Who's buying? The answer is India and China.
So India and China buy it, they refine it, and then we buy the refined products from them, right?
Exactly. I don't know if we mean the United States, but everyone else who's not buying Russian oil is buying the refined products that China and India, and also Turkey. We've got Indonesia. They're also doing this. And the funny thing about this is that that's actually totally cool under the sanctions and the price cap policy. In fact, that's how they hoped it would work, because they didn't actually want to reduce the amount of oil available on the global market, because that would push prices up too high. So what's going on is actually totally fine and cool under this
so
policy.
nuts. Not only are we buying Russian oil through India, China, Indonesia, but we're also giving those refineries the margin and robbing our own refineries of it. All right, so that's enough about Russia. Let's get back to the Saudis, because I think it seems like what they are really trying to do is get the oil price to rise. And if you look at a chart, over the last couple of years, it's just come steadily down and down and down, no matter how many surprise cuts they give us. Why is that? Is there just no demand?
Well, it seems like it's a confluence of things. The Saudi oil minister likes to blame speculators and their shorts. That's maybe partially to blame, but not fully to blame. Right now, we're seeing a lot, like you said, of cheap Russian crude. The Russian crude that's on the market, and there's a lot of it, is being sold at fairly deep discounts. And there's so much of it that is weighing on on oil that's on the rest of the market, believe it or not. So that's part of it. And then there's also the demand picture, and that a lot of that has to do with China. There's a lot of concern over China's manufacturing data, and whether while we've seen a lot of consumer activity come back in China, we're not really seeing the same level of manufacturing, and that really has and can have an impact on oil demand.
I'm trying to understand what the right price should be, Ellen, because we're looking at 71 and change on WTI crude right now, and we've been hovering around that level, I feel like, for a while now. But you go back to 2018, 2019, we were back around 50 or so, or a little bit above it. I'm trying to understand which is supply demand, which is a pivot to renewables and more pressure on the world to move in that direction. What is it? Is it a sign of the economy and lack thereof in terms of demand, or is it, as you said, maybe a few things going on here?
I don't think it's so much the pressure to pivot to renewables, because there's no sense that pivoting towards renewables or EVs is going to actually reduce oil demand all that much. There's so much that goes into that I don't think we're really looking at a significant impact on demand at this point. So I don't think that that's really what we're looking at here. I do think that economic conditions are very questionable, and every time there's some sort of signal economic-wise, we see oil prices react, because there's a lot of volatility. So it's almost like the market can't really decide, should oil be lower, should oil be higher? There still is quite a bit of supply on the market. U.S. production is very strong. I wouldn't say it's not at record highs, but we're still the largest oil producer in the world. And the fact that we've seen this distortion in the oil market because of the Russia sanctions that caused a price increase, but now that's kind of all sorted out, and the deck chairs have been rearranged, and oil's going where it needs to go, but it's going at slightly different prices. So that's also weighing on things. And I do think that perhaps prices are lower than the Saudis and the rest of OPEC would want them, but it doesn't really seem like there's a whole lot that they can do in the fundamental side to push prices up when sentiment in terms of trading and on the trading side is really iffy.
So the other thing I noticed looking at charts, Ellen, is that the oil price, though it seems low now compared to the $120 it was trading for, a couple years ago, it still is higher than the 5-year average, and it's also higher than the 15-year average. Where do the Saudis want it to be? What are they pushing for?
I think that they're really pushing for around $80, $85 a barrel. Once it gets into the 90s, people start to get really jittery, and the Saudis also start to get concerned that it's going to cut into demand. So I think they'd really be happy with closer to 85, at least for Brent. But it doesn't seem like they really have the capacity to do that just by manipulating supply. And, say the U.S. decided to make some really large purchases of oil for the SPR. That's a demand side issue that could actually help push up prices a bit. But it's really, we're in a place where, honestly, having really high oil prices could be somewhat damaging for the global economy. We could see it really, cutting into consumers' ability to make the kind of purchases or travel the way they want. Having slightly lower oil prices, and as you mentioned, it's not that low. It's not like it's $50 or $60 a barrel. We're still in the 70 range. Is actually quite good for consumers this summer, and may actually be a bit helpful on the economic side.
Don't we buy for the SPR whenever it's like under $72? Or, I mean, shouldn't in March it was like trading for 68? Weren't we buying then?
So the government said they were going to buy, and then they didn't actually buy, which was, I think, the OPEC and especially the Saudis were a bit peeved at that, because they expected the U.S. to start making these purchases, because they had said, hey, when oil gets below this price, we're going to start buying, and then they didn't. And so the Saudis, I think, had been expecting that kind of demand stimulus, and that's one of the reasons why we saw that quote-unquote surprise OPEC cut in April. They were trying to compensate for that. Now, one of the issues is that they have to do some maintenance in the SPR caverns, and that's part of why they were draining them a bit, because you can't actually do that work with oil there, but that they are going to start to have to repurchase soon, and it's a big question mark as to why they're at least not making those plans.
All right. Hey, Ellen, so good to check in with you. Dr. Ellen Wall, president of Transversal Consulting, senior fellow at the Atlantic Council, a Bloomberg opinion contributor on the phone from Jacksonville, Florida. It was pretty remarkable, Matt, that you look at a chart and you go back, and for such a long time, oil kind of didn't really move.
Yeah, it's pretty remarkable indeed. But if you look at a chart over the last 1 year, it's come down from 120 to 70. All right, let's get the latest on world national news right now. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C.
Thanks, Matt. Russia and Ukraine are reporting widespread fighting along the war's front lines as anticipation mounts for a long-planned Ukrainian counteroffensive. U.S. Defense Secretary Lloyd Austin, currently in India, was asked about Ukraine's plans.
Ukraine will want to make sure that it's doing the right things to conduct battlefield reconnaissance and all those things that could lead up to a successful maneuver. But what exactly they're doing, where, when, and how, I think the right thing to do is to allow the Ukrainians to speak to their operation.
Secretary Austin says Ukraine will need to find those points of advantage to get a leg up on Russia. Secretary of State Antony Blinken is reiterating the U.S. commitment to the security of Israel, which means making sure Iran will not be permitted to develop a nuclear weapon. He spoke before the America-Israel Public Affairs Committee.
Blinken endorsed Israel's new relations with Arab neighbors and said he'd try to bring Saudi Arabia along when he visits there shortly. He also obliquely chided Prime Minister Netanyahu for his renewed intention of controlling the Israeli judiciary.
We'll continue to express our support for core democratic principles, including a separation of powers, checks and balances, and the equal administration of justice for all citizens of Israel.
Blinken also strongly advocated for a Palestinian state alongside Israel, which is fiercely opposed by the right-wing politicians Netanyahu has brought into his current government. In Washington, Irv Chapman, Bloomberg Radio.
Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Equities move lower today after both technology and energy stocks erased earlier gains in subdued trading volume today. Tech shares led the S&P 500 lower. Apple erasing gains of as much as 2% in anticipation of that new mixed reality headset. Apple today down by 0.8%. That headset, by the way, is going to cost $3,499. S&P was down 8, drop there of 0.2%. The Dow down 200 points today, down 0.6%. NASDAQ lower by 11, a drop there of 0.1%. The NASDAQ 100 index, though, did eke out a gain, higher by 9 points, up less than 0.1%. So what is happening with the markets? Lisa Erickson is head of Public Markets Group at U.S. Bank Wealth Management, and she was our guest right here on Bloomberg Business Week.
I just really think that what's going on in the market today is a bit of listless trading. We've had obviously some big news on the debt ceiling. We're past earnings season. And this week is devoid of really big macro announcements. So the market really is more in a wait-and-see mode.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. 10-year yield, 3.68%, with the 2-year, 4.46%. Gold up $13 the ounce to $19.61, a gain of 0.7%. Am West Texas Intermediate crude up 0.1%, $71.80 for a barrel of WTI. United Health Group is moving to outbid Option Healthcare for Amedisys with an unsolicited buyout offer of $100 a share in cash for the home healthcare provider. United Health down 0.3%. Shares of Option Care Health up 6.3%, but shares of Amedisys up today by 15.4%. Recapping, S&P down 8, down 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on this Monday. Carol Massar along with Matt Miller. June, it's Equality Month. We're looking at it from many different angles, and that includes allocation to women-owned businesses. Our Bloomberg Technology team, Matt, reporting earlier this year that women only got 2.1% of venture capital funding last year. That's nothing.
Yeah, no, it's very little,
ridiculous.
especially if they are 50% of the people.
Yeah, explain that one to me.
I wonder, though, what percentage of startups are by women versus men? Because it may be lower, but not 2% for sure.
Yeah, I mean, I'm just going to say. All right, so let's see what our next guest asks, because she's working to change that. Joining us on Zoom from Thailand, where it's early in the morning, I believe, is Rose Vitale. She's managing partner at DRA Family Office. It's a single-family office-backed private investment firm, and she's with us. Rose, good to have you here with us. Tell us about your firm and your background, because you were an entrepreneur, and now you're turned venture capitalist.
Yeah, I appreciate that. Thank you. I am coming from Thailand quite early here, so I'm very honored to be on your show. So thank you. My background is I'm originally from Detroit, suburbs of the Detroit area. So I grew up with essentially no money. And so it taught me to really be gritty in terms of building a company. And I had no means of education or resources in terms of financing. So I had to really build it from the ground up. Became one of the largest partners for Cricket Wireless before we sold to AT&T in 2013, and then went off to help T-Mobile with Metro PCS. So I had a really long ride with wireless, and that's basically my background, and really looking to change the flow of capital to women. And like you said, women get less than 2% of the venture funding. It's actually 1.9, I think, as of this year. And so you're absolutely right.
So you got your starter, you made your money then in telecoms. Do you focus when you're doing venture capital on women in telecoms, or do you look across a broader spectrum?
Oh, I look across a broader spectrum. I'm no longer involved in telecommunications. And so it definitely taught me everything I knew in business.
Well, let's talk about it. Well, first of all, Matt made a point, and we're assuming we know the answer, but how many women startups are there out there, essentially? Are women starting businesses at the same rate as men in terms of, is that right, Matt? That's what you
Yeah, that's what I was wondering. All of the startups, how many of them are founded by or involve heavily women?
Yeah, that's a great question. I heard that early on in the show. So roughly about 40 to 50% are actually started by women. And they essentially, they don't have a lot of access to capital. And that's one of the things I really want to change, just because I knew how difficult it was for me. And so it's really my purpose of giving back, because I think that you don't know what you don't know, and what you don't know in business can hurt you. Whether you're going out there to raise Series A, B, C, it's important that you have the right people surrounding you, because if you don't, it can be very detrimental to your experience in business.
So if most women are bootstrapping their businesses, then it seems like they're better able to deal with adversity, or at least they're learning that lesson as they do it. Do you talk with other venture capitalists about why they're not making the decision to give more women money?
That's something that we have discussed. And I think that it really comes down to unconscious bias. Some of these, men that I am now, work with, they just say that, generally they allocate capital to people who look like them, who go to the same clubs as them. So I think it's not per se, not wanting to allocate capital, but I think it's just not being aware of it, because, they're allocating it in a way that just makes them feel comfortable.
Bloomberg had a story a few years ago, though, that talked specifically, and mind you, I think it was maybe either coming off the pandemic, that even female venture capitalists were less inclined to invest in female-started businesses. So is it just a case that we haven't seen enough women-started businesses that become blockbusters like a Google or an Apple, and that's part of the problem, or what?
Yeah, great question. I don't necessarily think it's that. I think that there's some really innovative companies that are out there who are ran by women. I just think that it really is the lack of access to capital. I mean, think about it. Yeah. Capital is the blood of a company. And if you don't have access to it, how are you able to scale a company to like a Google or an Apple or something of this nature? It's nearly impossible.
So Rose, what do you invest in? Where do you find these businesses, and what are you, most hopeful about? What gets you going in the morning? Not necessarily like 2 a.m. in Thailand, but.
Well, good question. Great question. I do a lot of speaking in regards in the family office space. I set up the family office to be able to, allocate capital to women, just because, like I said, I really see the opportunity. If women are getting less than 2% of it, think about the opportunity that are essentially lost if they don't get the funding. And if we can double and triple those numbers, we will create massive impact. I'm not only talking on a financial sense. I think that when we invest in women, not just because I'm a woman, I know sometimes, I'm going to say it here, sometimes women can be very difficult to deal with. We're our worst enemies, right? And so I think that the opportunity I see to create impact, not only on a financial sense, but in a community and in basically at the ground level, is really fundamental. And that's what I'm passionate about. That's what I'm really excited about, because it hasn't been easy, navigating this in terms of how to allocate capital and where to allocate capital, and do we allocate it to fund managers? Do we allocate it directly to direct companies? So there's a lot of thought that goes behind how we allocate capital as a family office. Right. And so just committed to how that's really going to change. And I look for opportunities that really have a transformational change on somebody's life.
All right, Rose. Well, nice to spend some time with you. Rose Vitale, Managing Partner at DRA Family Office, on Zoom from Thailand. And they're investing in financial services, gaming and hospitality, land development. So lots of areas.